Everyone, we're going to open up for Q&A. So if you have questions for Rich, go ahead and raise your hand digitally and we'll call on you to unmute yourself. Yeah, don't do it physically. Otherwise, I won't be able to see you. But Matthew, you're first to go, brother.
All right. Thanks, Rich. Appreciate it, man.
Oh, anytime. Great to meet you.
Sorry, man. Would love to connect more as well. But I'm curious. I've considered, because I'm trying to buy apartments in San Antonio, and I've considered going down the path of family offices. And you mentioned that it comes off much better when you get a warm intro and you're not necessarily marketing to them. I'm curious if you have any advice on maybe if that even would make sense for me. Like, I'm a go-getter. I'll start cold calling everybody, and it seems like that's not the play. And I'm fine with, and I agree with you on, let's plant the seed. I was thinking next year I go meet a bunch and maybe they invest with us 3 years from now or 5 years from now. But just curious if you have any guidance or advice for me.
Yeah, I think if you compare the institutional level, meaning all they really want to see is the term deals. If it matches the deal and passes their underwriting, they'll do it. That's all that really they care about. A family office cares more about the relationship than the terms. And I think once you understand that, it changes. Going out and shaking hands and not talking about a deal is actually pretty attractive to them, because then you're interested in them and there's probably things that they need that you could help them out with right away.
Yeah.
But it's that relationship on the family office. And I think the RIAs are very similar to that. It's where, I know it's counterintuitive, and especially if you want to hustle and go out and get a deal done, my best advice is take the deal off the table and bring who you are, genuine, authentic self, and go and meet them as a person and connect with them, whether it's an RIA or a family office, and just learn what are their pain points, what are their goals, what are they trying to accomplish over the next 5-10 years, and then get permission to build that relationship and bring options to the table that they'd want to look at.
Yeah. To follow up on that real quick, I'm with you and I agree with you. It's more the process of getting in the door, right? Because some people are like, who are you? Why do you want to talk? And it's, I just want to get to know you. Which is what you're saying, and I agree with, but it's like hard to, that's like that balance. You follow what I'm saying?
I do. And that's when I said that one thing that's worked for one RA doesn't work for the other. I wish it was as simple as just getting an introduction from someone else and then you're facing. But the things that have worked for me have been personal introductions, and then I follow up on that from there. But I don't talk about deals out of the gate. And then there's some social clubs, like here in Boise, we have what's called the Arid Club. And I've met several through that have provisors on the west side. That's another group that's a professional networking group that has been very fruitful in making those initial connections. It has not worked for me to call in or try to walk in. You're right. That doesn't work. Say, I just want to get to know you. And they're like, it doesn't come across the same. But if you go in and say, look, I've been doing syndication for quite some time. This is how many assets I have that I've worked with. Before I talk about anything like that, I just want to understand who you are and what you're trying to accomplish, what value you're wanting to add to your clients, and just explore if there's even makes sense to develop a relationship and go forward. Does that make sense?
Thanks, man. Yeah, it does. I appreciate you. And thanks for sharing the backstory, man. That's really cool. And appreciate you being here.
Thanks, Matthew.
Matthew, I'll add to that. Because I know you and I know the network that you have, I wouldn't be surprised if there's a handful of people in your current network that can make that introduction for you right now. And so I'll give you an example. Like one of the guys I know, he's a big attorney here in town, a real estate attorney, and he works with a lot of banks because he's the real estate guy, the real estate attorney contract for a lot of banks here. So even though he's not a family office himself or an RIA, but I wouldn't be surprised if he knows some. So he can make that kind of introduction with your colleagues there at Texas A&M. I bet someone has an in that you're not thinking about. So,
that's a good point. Yeah. Thanks, Tim. Appreciate you guys.
All right. Thanks, Matthew. Mark, go ahead. Unmute.
Matthew, hi. Great talk. I have been trying to crack the code for A's recently, and this is very topical for me. Everything you said is so resonated. You don't want to do 506Bs. You got to nurture your personal relationship long before you talk about a deal. One thing I'm wondering, we're starting to touch in your conversation there with Matt, is how to meet these folks. I, of course, think like an engineer. because I'm an architect and engineer. I want to do things as efficiently as possible. Are there, that you're aware of, clearinghouses or lists of RIAs out there, and do they also talk about the type of asset class and their philosophical bent towards investments?
Yeah, the list that I've seen, we got through like the Family Office Club and things like that. I haven't had much success through that, just being candid. However, just looking at the market trends, there's a significant transfer of focus into the alternative space.
Yeah, because it's stock value.
It is, and that will continue growing. That's not something that's going to die. In fact, when you look at the capital stack makeup over the last decade, there's a lot of areas that were heavily banking financed. And then when they pull back, you have the private funds coming in to offset. I don't see the trend of private funds going away now, where it has in the past. And so I think if I could build a strategy, what I would say right now, and this is what we're doing to spill some of the beans, but looking at the trends with the alternative investments, right now, most RIAs, when they think alternative investments, they're thinking of the REITs, and that's their experience. They don't have experience with private placements directly. And a lot of that is educating. How can they take advantage of private placements in their own backyard where their investors and their clients are going to resonate and just want to be part of? And I think it's that educational piece that has to happen in order for RIAs to understand the value that you can bring to them that's different than their current repertoire of what they have available.
Follow-up question then. As most of the lending that's gone on in the last 5 to 7 years has been with private equity. So it legitimizes the asset class for real estate. That said, we're in one hell of a meltdown right now. And so I'm wondering if you have seen risk aversion with RIAs now due to
Absolutely.
the current.
And even more, because for example, if I'm an RIA, or let's switch it, if you are an RIA and you're allocating one of your investors $1, and it's one of your largest investor, and they have, let's just say 10 million with you, and you're allocating 250,000 to my deal. My deal is such a small drop in the bucket to what you're managing, right? But if my deal goes bad and hurts a relationship, you lose 10 million. That's what's at stake.
That's what's outsized. So, a small placement like that is going to blow up your entire business.
Correct. And so when the RIA, in their mind, they're looking at this investment as, okay, this looks like a good investment. What's the risk? And if something goes wrong, how does that impact me and my client? The client gets mad at me and I lose a client. It's not just the 250, it's the 10 million I'm losing. So that's what they're weighing. And so when you go through the structure and the underwriting and the due diligence that you've done and the core teams you're bringing to the table, it's all of those things working together that you're proving that they can have a better experience here in the local market. And what are you doing to mitigate those risks that you're seeing on the horizon? For example, in the Boise area, we got out of all multifamily just because of in the Boise market, we had a lot of doors coming online. We've weathered it really well. We spiked to a 10% vacancy rate pretty quick, but we had 3,000 doors come on at the same time in a smaller market. Right. We're now at 6%.
We've had hundreds of thousands of units come online, and I'm finishing up my year-end report, and many cities have 18 to 24 months worth of supply just sitting vacant. So that's my interest in this question.
Yeah, and not all markets are the same. Like office, just for example, to compare, in the industry, office became a bad word in the last couple of years. But I have one of the largest office portfolios here in the Boise Valley has been at 99% occupancy constantly through COVID, through everything. So depending on location, that also plays a part. So then you have to tell the rest of the story as well. But Greg and Mark, feel free to reach out. Happy to bounce idea, and I'll be transparent what has worked, what hasn't, and I'm happy to help anyone.
I think I already sent you an email, so let's chat.
Awesome, Mark. Thank you. Okay. Anyone else? Last chance for questions before we wrap it up and put you guys into your breakout sessions. Okay, I don't see any other questions. So, Rich, thank you so much for being on. Matthew, you have another question? Go ahead, brother, before we wrap it up. Yes, go ahead.
Rich, I'm curious, just on a personal note, you brought up I think you said the bankruptcy aspect and everything. And when you were going through that, do you wish you didn't have done that? And has that been a setback when talking to some of these offices? And do you bring it up like when you first talked to them?
There was a time I didn't want to talk about it at all, but every investor or every RIA I meet, I tell them the story. They need to know for them that I've been through. And for me, if that's a turnoff, then it's going to be a turnoff later that they're going to find. It's not like they're going to find out. So there's that side. But for me, I wouldn't wish it on anyone how it went through. It was pretty hard to sell. We had to sell every single asset we owned before we even went there. So by the time I went out in bankruptcy, I didn't have any assets left. It was gone. Right. But for me, I went through some pretty dark times, went through a pretty good depression. My value was tied to what I earned for my family and provided. And I had to get through that. But going through it also, money changes people. And I hate to say that, but it's true. When money's plentiful, there's one thing, but when it goes away, it changes how people interact and partnerships. And it just solidified how important getting the right teams to the table is. Period. You can have the best transaction in the world with a dysfunctional team and you will lose the transaction. It's that simple. Great question.
It resonates. A lot of people, someone told me recently, because I lost, just personal note, $4 million on one publicly traded company, and it was rough, man. And so all the things you're saying, I resonate with. And someone told me recently this quote that says, "Let your skeletons dance." And I've loved it, man, because everyone has things that they've messed up on, or they failed at, or they're ashamed of. And the more we bring things to light and be real, the more we can truly resonate with people, because everybody has struggles and challenges. So I just think it's really cool what you're sharing. And I've gone through that mindset of everything you're saying, like getting closer to God, realizing that money doesn't matter anyways. We got to do great things. And so just not being attached to it or having my value tied to that. So I just appreciate you saying everything, man.
Yeah, that's definitely a deeper, I bet 99% of us, especially us guys, us men here on the call, tie so much of our value to our material success. And yeah, I can totally resonate with that.
It also goes to how important it is to protect your investors, and what lengths are you willing to go through to protect them in your projects. And if you're okay losing up all of yours so they can be protected, that is what is going to help build relationships. And it's not the transaction. It's just a transaction. Focus on making an impact and also deliver that freedom of purpose.
I love that.
Beautiful, man. Thank you.
Yep. Thanks, Matthew. Okay, we'll go ahead and wrap it up. Rich, again, thank you so much for being on our show today. Really appreciate your wealth of information. And I just love that you're so open, so honest, and sharing everything. So thank you so much.
You're welcome, Tim. Thank you for having me.
That's great. All right, everyone, let's take a picture with Rich real quick. Let's turn on your cameras. I'm gonna remove, there we go, turn on your camera. Like Matthew already know what's up. So Rich, what you don't know is that we flex for our pictures on this show.
Oh, no way.
Yes, we do.
I love it.
All right, you guys ready? I'm going to count us down. 3, 2, 1. Yay.